So I want your view, Spencer, on the big market picture, but let's start with the housing market and how all of these trends, rising inflation, rising rates for the foreseeable future, how that's going to bear down on the housing market.
Well, what's driving home price appreciation is limited supply. So for most decades, starting in the 60s, we had 20 million new homes be built. In the decade after the financial crisis of 2008, we only had 10 million homes that were built. And so there's just a lot of missing supply. And that's what's driven this huge uptick in home price appreciation over the last 5 or so years. So as mortgage rates have gone up, and they still have further to go, clearly home buyers are gonna have to trade down to slightly lower price points. But most of the data that I've seen around housing still predicts strong housing appreciation, not as high as it was, not 10 to 20%, but probably 5 to 10% home price appreciation. Now, the stocks that underlie this, like Zillow, that's a bit of a whole other question. And there's obviously been a risk-off trade in the public markets away from growth and more towards profitability. And that's hurting companies like Zillow and many other prop tech companies as well.
So I just want to linger on this because there's a lot of people trying to get into the market who think they just can't right now if they didn't buy something first 10 years ago. You're saying prices are still going to go up. And there's still a lack of supply, so there's still going to be competition, even though we're seeing 40-year inflation and rates going up, and people's portfolios are getting pummeled.
We're still only at about 1 to 2 month supply of housing, which is amazing. I mean, a normals market would have 6 months supply of homes for sale. So homes, there just are not enough homes for sale. We need home builders to build more homes if you want this supply-demand imbalance to come back, into balance. So if home prices are still going to keep going up in most major markets, not as quickly as they were, but home prices are in fact still appreciating.
So let's talk about the sell-off. How much worse does it get? Has a bubble popped? Is this, what we're going to see for, the next several years?
Well, it's a bit of a bloodbath out there. Obviously, public market investors and viewers can see in the public markets just how bad it is among public companies. I can give you a little insight into what's happening in the private markets, and unfortunately, it's pretty ugly there as well. So the closer you are to being public, the harder a go of it one will have. So companies that were already in the IPO window hoping to go public this year, that window is shut. S1s are being pulled. Those companies are not getting public anytime soon. Late stage growth companies are pulling back. Early stage companies are not getting rounds done. I mean, there's a real venture chill afoot, unfortunately. And I'm seeing companies across all of the private sector, all of the venture funded companies that I'm involved in are pulling back in different ways. So many of them are tightening headcount. Many of them are cutting marketing. Most of them are hunkering down. Some of them are doing inside rounds because they can't raise outside rounds from new investors. So it's amazing how quickly the weather has turned in just really a couple months. We've gone from an incredibly ebullient market to one that's extremely challenged.
So how long are they going to hunker down for? How long are they going to have to be hiding?
Well, I had one investment banker tell me the other day that if you look back over the last 20 years, the IPO window has only ever been closed for about 6 months, and we're already in month 4 of closure. So that bodes well for a reopening of the IPO market sometime later this year. But private companies, venture funded companies, they're just assuming that this year is kind of a write-off. I mean, every company I'm involved in, I've said you should operate your business assuming you'll not be able to raise a venture round this year. That's how conservative at least my companies are being. So I think this could last for quite a while. It's this risk-off trade as interest rates ticked up. Public market and private market investors are prioritizing profitability over growth, and that's increased the cost of capital. It's made it difficult for high growth companies to raise money, and they're all pulling back as a result. Sorry to be the bearer of bad news on a Friday afternoon.
Well, giving it to us straight, we appreciate it. There is one person out there who seems to have no trouble raising money, and that is Elon Musk, who has lined up a long list of investors to help him take over Twitter. He was tweeting earlier some of his ideas, more ideas for how he plans to change the company. There's still a lot of unknowns. You're a big, prolific tweeter. What do you think about Elon Musk owning this company?
Well, I was surprised, to be honest, and I tweeted as such. I was surprised that this deal got done, although it actually hasn't gotten done yet. So we'll see. But As a Twitter user, I'm sort of excited to see what Elon's product insights are going to bring to the product that I've used for so long and so many of us love. So it should be interesting to watch. I am a little surprised that he's gotten so much financing lined up, given that he has publicly stated that he's not going to try to run this like a normal business. He's not trying to maximize profit. He's not even really interested in a financial return, and yet he has still convinced others to invest alongside him. This just goes to show how much amazing magic and pixie dust Elon Musk has associated with him, that he's able to get people to co-invest even when he says it's an unconventional investment. I do worry as a Twitter user that the company has made great strides to reduce spam, reduce bullying, and a lot of the discussion about how we're going to restore free speech with Twitter, it sounds really good, but with free speech comes a lot of spam, a lot of harassment, and a lot of bullying. And those are things that Twitter management has worked very hard to reduce over the last couple of years. So I worry about a possible step back in that regard. But benefit of the doubt has to go to one of the greatest entrepreneurs of all time, who's created so many extraordinary companies. And obviously he uses the product as much as anybody. So it'll be amazing to watch. There'll be plenty for you to talk about and for me to tweet about as Elon takes this company private.
What do you think about the role of Jack Dorsey here and the future of a decentralized Twitter? Is that a good idea?
I'm not really sure what that means, to be perfectly candid. There's talk about open sourcing the algorithm and providing more transparency, but I don't really know what that means to the user, and I don't know how it affects the business model. This company has always had. It's always been a little dysfunctional, right? At the board level, at the management level, it's always had challenges. It's always punched above its weight in terms of media attention and consumer interest. And so, maybe out of the public eye, maybe private for a couple of years, it'll be able to stabilize its leadership team, stabilize its board, focus on the product, and then hopefully come back out the other side, an improved company and hopefully an improved product.